Hi, I'm Phyllis Rector, and we've been talking about the different types of factoring in the past two sessions, educational sessions. This time we're going to talk about construction factoring, or maybe I should say, the question is, why are there so few companies that will purchase accounts receivable or factor in the construction industry? And the answer is that, first of all, construction is just inherently it's inherently riskier. The risk of default of your customer just is, statistically, there's more risk in construction than there is in other commercial transactions. The other issue is the law under which construction operates versus the law under which the rest of commercial transactions operate. So the Uniform Commercial Code, generally speaking, is what governs commercial transactions away from construction. Construction has its own set of rules, and I can't tell you exactly what the name of the body of law is, but it essentially acts like a trust law. So the flow of funds from the owner, generally through a bank, to the general contractor, to the subcontractors, to the sub-subcontractors, to the suppliers, every single time one of those payments is paid down the line, that money is paid to the subcontractor in trust. Some of that money is for him, and some of that money is in trust for his sub-subcontractor. He pays his sub-subcontractor. Some of that money he's paying to him is really being held in trust for his supplier. And then going back up the line, each of those subcontractors and suppliers needs to supply lien waivers to their customer to say, yes, the guy farther down the line actually has been paid. That's the only way that you can get the whole project released from its title free and clear, okay, at the end of when the project is finished. So for instance, banks making loans, as we just talked about in the first video, a bank using accounts receivable to collateralize in the construction industry. I can tell you the story about a local bank who had $600,000, he thought, I shouldn't say the bank had the $600,000, the general contractor had $600,000 in accounts receivables on his books, and the bank was owed about $500,000, and they were going to pull his line, only to discover that more than half of that $600,000 was owed to his subcontractors. So the bank really only had a couple $100,000 of free and clear collateral that they could collect on against their $500,000 loan. And that's the issue that people don't understand about the way construction law works. So the Interface Financial Group has been doing construction. We're one of the few of the people that do it. In other industries, we advance 90% on any one invoice. In construction, we only advance 80%. Number one, because it's riskier. Number two, because the progress billing cycle of turning in your invoices on the 20th or to the 25th of the month, and then not getting paid until the end of the following month or the beginning of the next month, means that the minimum payment cycle is 30 days and generally goes to 45 to 60. And if you're a subcontractor, I'm sure you're very aware of that. So that's why we only advance 80%. And because we understand that that invoice may have money in it that is owed to the supplier, we are going to pay our client advance. We're going to pay him and his suppliers with joint checks, okay? We are going to make sure that we get the lien waivers. And unfortunately, it is a very time-consuming and cumbersome process. A lot of other companies don't, number one, they don't understand it, and number two, they just think it's too difficult, and there's so much other stuff that they could do without having to bother with this, so that they just don't do it. So that's basically why you find fewer companies in the financing in the construction industry. Next time, I think we'll talk about things other than just kind of factoring things. We're going to talk about how do you qualify for financing in this new era, the post 2008 Lehman Brothers bankruptcy and all this kind of stuff. Hope you're having a great day. It's been good to talk to you. Phyllis Rector, signing off.